One of the things that we never got taught in school was how to build a stock portfolio. Oh, we got taught that E equals MC squared. I could tell you the periodic table back to front, but when it comes to investing and picking stocks, no one even mentioned it. What I want to do in this video is teach you how to create a stock portfolio and then eventually grow it into something big. Obviously, the end goal is that our portfolio gets big enough so that we don't have to work again and we can just use our stock income to cover our expenses. That's the end goal, but in order to get there, you have to start somewhere, and what you really want to do is start right now. So I'm going to construct a portfolio throughout this video to give you an idea of how to balance it well, with risk, with growth opportunities, and with a range of different investments. Now, the thing that I wanted to say off the bat was don't just copy these investments. Go and do your own research on them, and if you end up liking them, well then of course you can buy them. But do your own due diligence, please. So the thing about building a portfolio is that you have to know how to balance it. One of the biggest mistakes I see beginner investors make is they only buy stocks that can 10x, 20x in terms of price. The thing they don't realize is these stocks also have a huge amount of risk attached to them. So what they end up doing is building an extremely risky portfolio. You need to balance risk with any portfolio. Every seasoned investor will tell you that. Now, the great thing about buying Berkshire Hathaway stock is straight away you've built a strong backbone to your portfolio. And that's because Berkshire is the investing firm run by the greatest investor of all time, Warren Buffett. So if you own Berkshire Hathaway, the stock, you immediately own some of the greatest companies in the world. Apple, Coca-Cola, Bank of America, Geico, Duracell, and any other investments that Buffett decides to make. Basically, it's a hands-free way of being an investor in the companies that Warren Buffett decides to invest in. Buffett, for those who don't know, he's considered one of the most successful investors in the world. His net worth is $85.6 billion, all done through smart investing. So he's not exactly the dumbest investor to back with your own money. Now, some of you may argue that Buffett's an older gentleman and tends to invest in those companies that are more mature in nature. That's true. A good way to balance this out is through ARK's Innovation Fund. The head investor and founder of this fund is Cathie Wood. Cathie, she invests in disruptive companies that have the potential to change the way the world works. So she's made a lot of money from stocks like Tesla, Spotify, Square. It's those innovative companies. The mix between her way of investing and Buffett's is a smart way to have in a portfolio and a great way of balancing risk right from the get-go. Now, another great investor that has really been killing it since he started his fund is someone called Chamath Palihapitiya. He's achieved a return of 32.9% with his investing fund, and he's been an early investor in Tesla, Amazon, Square, Bitcoin, and a range of other high-growth investments. It seems like everything that I've seen him bet on has done well. That's the reason that I follow him, because he's got proven results. Anyway, one of the stocks that he's just taken public is a stock called SoFi. SoFi is one of those companies that is new, but has the potential for high growth. Because if you think about it, one of the sectors that has not been overly disrupted is banking. Shopping got disrupted, everyone does it online. Education, we all use our computers to learn now. Cars, people are starting to buy electric. But when it comes to banking, that's been the same for hundreds of years, it seems. This is where SoFi comes in and allows customers to operate all of their banking needs online. It follows a new type of banking structure called a neobank. That just means a bank that is purely digital. SoFi, they dominate the neobank sector. They're responsible for 90% of all new neobank account creations. So it really has a great chance of being the head company that disrupts banking. If it achieves this goal, it's a lot more than a 10x stock. In a portfolio, it's important that you also have those companies that have stability to them. Those that have years and years of a great proven business model. Alibaba is one of those companies. It's in a thriving industry, e-commerce. Their earnings have gone up by 5 times the amount in just 4 years, and they're one of China's biggest businesses. One of the things I like most about Alibaba stock right now is its price tag. The stock is down 20% from their high, meaning you can buy a great business for a reasonable price. One of the questions that you should ask as an investor is, what are the next generation stocks? And what I mean by this is, what stocks are going to be the next Teslas or Netflix or Amazons and Facebooks who had some of the highest returns over the past decade? What will be the stocks that will do this, but over the next 10 years? A potential sector that may do this is the genomics sector. Why? Because this sector has the capabilities of curing diseases. Let's just look into your genome. Hang on, you've got a problem there. Let's edit that out and cure whatever disease you were born with. That's the world-changing capabilities that this sector has. And CRISPR Therapeutics is one of those companies that is looking to do just that. Develop therapies derived from genome editing technology. Right now, the stock's valued at $15 billion in terms of market cap, but let's say they start growing this technology and curing diseases. They could be as big as a company like AbbVie, $200 billion in market cap. So it's another one of those potential 10x stocks. There's no guarantee, but there is the possibility. But you guys know me, when it comes to building up a portfolio, you need balance. General Mills is a perfect company for this because it has a weather-tested business model. It's been around for over 150 years and it's paid dividends without interruption for 122 of the recent years. Its business model, it's not one of those that will get blown away in the wind, we can just say that. They're a US-based food company with big brands like Cheerios, Yoplait, Lucky Charms, and hundreds of others. Looking at the stock, they're currently selling for $56 a share, generating earnings of $3.90. As you can see, they also pay a pretty solid dividend of $2, giving it a yield of 3.6%. Those are pretty good numbers considering the market that we're in. Now, I know a lot of people are gonna lambaste me for this choice, but let me explain myself. Bitcoin does not need to be a massive position in one's portfolio. It can be very small, say even 1% of it. But I think it's silly not to own Bitcoin, because Bitcoin is one of those assets that there is no limit on how much it can go up. If you bought Bitcoin just 5 years ago, it's gone up over 10,000%. So let's say stocks crash, the economy collapses, civil unrest takes place, Bitcoin might be that one asset that saves your portfolio. Whenever you buy a stock, arguably the two most important numbers that you should look at is price and earnings. Is the stock selling for a good deal, and are they generating nice profits? Centene does well on both of these metrics. If you look at their earnings, it's grown at a 19% annualized rate since its IPO in 2005 and a 31% rate from 2013 to 2019. And if you look at their price, they're currently selling for just over $60 a share, with a PE ratio of 17. So they're one of those stocks that hasn't gone up dramatically over the past year, and with their earnings growth, that's a nice price to get in at. So I'll quickly just explain what Centene is. They're the largest Medicaid managed care organization in the US. They focus on healthcare, they focus on insurance, so it'll expose your portfolio nicely to those two sectors. And I'll leave a link in the description on a video that goes over it in more detail. I don't really have the time to fully do that in this video. That's if you're interested in the stock. So this portfolio is starting to come along very nicely. We're an owner in the old school Warren Buffett style of investing with Berkshire Hathaway. We're an owner in the newer style innovative investing with Cathie Wood's ARK Invest. We have our hands in the Chinese market, Alibaba, the genomics sector, CRISPR, the food industry, General Mills, the healthcare sector, and we even hold some nice growth opportunities in SoFi and a little bit of Bitcoin. One sector that I think we're missing is real estate. As Bruce Flatt recently said, probably the greatest discount out there between what you would see as value and price is in REITs and real estate securities. Brookfield Property Partners is a great way of taking advantage of those opportunities because they invest in a wide range of properties. These include office, multifamily residential, retail, hospitality in North America, Europe, and Australia. So they're a strong, diversified real estate company. The stock sells for just $17 a share, so pretty much anyone can afford them, and they have a massive dividend of 7.7%. The one thing that we do need to watch out for is, can they get their earnings back on track after the pandemic? If they can, this will be a great deal at this price. So as you can see with this portfolio, we've built it from the ground up, not just focusing on one sector, but on a wide range of them. We've got growth, we've got stability, we've got real estate, innovation, diversification, some of the most important things that a portfolio needs. But please do not just directly go out and copy this portfolio. Don't buy any of these stocks until you've done your own research. These are merely suggestions of opportunities that I see in the stock market, and this video is made to give you a feel on how to build and grow a strong portfolio, because unfortunately school never taught us this art, and that's why it's so important that we learn it ourselves. Hope you benefited from this video, guys. Please drop a like if you did, if you want, and subscribe to Cooper Academy if you want more videos like this one.